Hello traders, today is the 23rd of February. My name is Neville Hornsey, market analyst YouTrading, and today I'll take a quick look over the charts. Okay, before we get into any technical analysis, I'm going to look at the YouTrading.com Forex heat map, and you can see here, bottom left-hand corner is green, top right-hand corner is red. So for me, today's markets are more risk on. We're seeing moves into the commodity pairs and out of the safe havens. Looking at the news, we've had news that the EU ambassadors have approved sanctions on Russia. There's going to be more EU, NATO, Russia, US talk today. Going to a chart, looking at Brent oil here. I'm thinking that we've seen a sweep high of this level here, so around 95. That came in at 14th of February. That candle here from the 22nd of February pushed through, and then price action just basically collapsed back inside the range. So now I'm looking for reasons to go short. We've taken out a swing low here. We've got a swing high here. So as long as we don't make new swing highs, then this stop loss shouldn't get hit. What I'm doing is looking across. So here we had this green candle, then a sort of larger outside red candle on the hourly chart. This next candle tested the lows of this little range here, rejected, and now I want to see this level basically hold. Essentially my stop loss could come all the way down here really. I just want to give it a bit of room just in case it does test a little bit higher. There is a potential test up here at 95.93, but for now I'm thinking price action back in this range. Going to try and see if we can get price to come back down towards the 89 sort of level. Going to gold. This morning I had it on a line chart in the market brief, and I said if we get a close below a swing low, then that would be an indication that we should be at least anticipating further lows. $1,900 an ounce is quite a significant psychological figure. We could get profit taking around this level. We've seen it go sideways since the 17th of February, and there is this imbalance here to sort of test back into. If we get below the 1887, close below that, then I'll be looking for like a more significant retracement on profit taking. USD ruble. Yesterday I said I wanted to see USD versus ruble go a lot higher. Seeing the flows come out of the Russian index essentially sort of shows that investors just are not interested in being in Russia at the moment. So if there's reason to be flowing out of Russia monetary wise, then the ruble should also weaken. So I'm thinking USD ruble goes a lot higher. Going back to the daily chart on the DAX, ideally, if this sort of market structure is broken and we're going to see a larger decline back down towards the lows here around 13,500, I want to see the DAX push up into some sort of structure, some sort of low that hasn't been tested. This one would be the nearest one from the 18th of February. We haven't quite made it yet. We're still finding resistance at these old lows. Obviously 15,000 would be great as a sort of psychological reversal point. But it turns out 14,800 is currently acting as resistance. So, potentially we could see lower prices from here. I'm going to hold out and wait for a test of a low, wait for market to come to me. Looking at the euro versus the pound, like I said, the European diplomats have approved sanctions. So, is that good for the euro? I don't know. But currently, 86% of traders on the euro versus the pound and 94% of traders on the euro versus New Zealand dollar think the euro should go higher. These guys are generally wrong. So as a contrarian indicator, we should be looking to sell the rips. Yesterday that worked. We saw a push into this low here from the 16th of February, really rejected it, came back down to test 0.83. I'm expecting maybe one more push on the euro versus the pound up to the 0.84. This low here from the 10th of February, ideally that would get rejected. If that doesn't get rejected, then this is actually an accumulation sort of phase. And as much as I don't think the traders here in the sentiment indicator are correct, they might actually get their day. For me, if they were to sort of see prices come back below here, they'd get stopped out, and yeah, maybe then we could go long. Looking at the euro versus New Zealand dollar, obviously the RBNZ this morning basically raised rates by 25 basis points. So flows have been going into the Kiwi for over a week now. The New Zealand dollar has been a lot stronger than anything else recently. We're at a balance area here, so between sort of mid to late November, we went sideways before we pushed up higher. If you look to the left, there's even more reason that the 1.68 is significant. We've traded through it so many times over the last year or so. Below that now, if you look a bit closer into the candles, all the highs have pretty much been tagged. So there's no sort of pending orders left as such. There'll be some stop losses under the swing lows here. There's this imbalance here from the 23rd of November up to the end of November. That should probably be, a target for a lot of traders if they are short, assuming that we can get through this balance area. So if we were to go lower, at least down to 1.64 would be good, maybe to the lows here at 1.6. Let's quick look at the benchmark index, the USA 500, which is the S&P 500. There's a little area here. So we've got the 16th of February here. So that's Wednesday. And that would be 4428. That could get tested. If that was to break, if that swing high was to break, then we've got this double top up here, 4596, to get tested up to the sort of candles up here. So, maybe this is a larger double bottom. Obviously, the bears want to see this sort of price action just now take out yesterday's low. If we don't take out yesterday's low, then there's some sort of accumulation going on, and we could be going up to test the 45.99 sort of level. All right, that's pretty much all I got for today. I'll speak to you again tomorrow, and take care and good luck.